Alrighty, welcome to our training, our Rockstar training. We have today a great message for all real estate agents regarding mortgages and lending, something that is extremely important in the real estate process. So some agents might ask, well, why would I need to know about mortgages or lending, right? Why can't I just kick it to my lender? Well, Rockstars don't do that. We are professionals, right? We need to understand the process. We're not a commodity where we just walk around and we don't have the capacity to help clients, because a lot of times throughout the real estate process, even before the lender gets involved, even if a client has a pre-qual or something like that, your understanding of mortgages will greatly help you close deals, get clients, build confidence, and facilitate the transaction to the closing table. So of course, the lender is a huge part of that and is the expert, but us as agents, we need to have an understanding of the lending process, of the different mortgages and stuff, to be able to be those professionals, the Rockstar agents that we obviously are looking to be and are. So without further ado, I'm going to let the expert take the stage and give us a great lesson on mortgages, and we'll do some Q&A and stuff. Let's have some fun.
Awesome.
My man, ALLIE, nice to have you here.
Thank you. Thanks for having me. So my name is ALLIE ABBATIELLO with Quintessential Mortgage. Okay? And we're a broker, so we're not a bank. So what that means, in case you guys don't know, we could basically we have access to use over 40 different lenders. And the reason for why that's important is, we get some clients that need that, certain type of program to help them get qualified, because maybe they can't get qualified the traditional way. Also just gives us different programs to help them get better interest rates. Sometimes they're, like we were just talking about, they're a fireman or a police officer or a nurse, and we have programs for that with different lenders. So it's really important because it gives us a lot of flexibility and options to make sure we can get the deal done. Okay, so I'm just going to go through kind of start to finish of what I think is important and kind of in the mortgage process. So, for me, typically, this is what I feel should be pretty basic. 30-45 days should be your loan from start to finish, okay? Application for us, we submit a loan, takes about 24 to 48 hours in our back office to get registered, okay? That's when the loan is actually with the bank, okay? Your client's getting disclosures. At that point, it's gonna go to underwriting, okay? And that's when we get that conditional approval letter that we send out to you guys, send to the attorneys. And that, with some of the banks that we use, we can get that letter, honestly, within 1 to 2 days. Some are a little slower in turn time to 5, but there's times where I send you guys a commitment letter back in 2 days and like, how'd you get this ready? We know it's conditionally approved. And when I say conditionally approved, in case you guys know what that means just means it's approved based on the income and calculations that we put in the system, and now we have to get the conditions, appraisal completed, title, and other conditions from the borrower to officially get the clear to close.
So can we clarify right there? So, because that's a pretty big thing. So when you're pre-qualing somebody, not all pre-qualifications are equal, right? You get some from some lenders, they really haven't qualified anything.
Right.
Right. So what is it that you require?
Right. That's a good question. So, actually, this is a very important topic you brought up. So when you get pre-approvals from all these different lenders, exactly to this point, honestly, in my opinion, it's really just a piece of paper. It's only as good as the mortgage broker, okay? Because honestly, anyone could write a pre-approval, right? They could just type it up. That's just what it is. But for me, and what I think the proper way is, and what you're supposed to do is, not only look at just the pay stubs, the assets. That's a given, right? I hope every mortgage broker does that. But the next step is, I run it through a system that's called AUS, Automated Underwriting System. That's Fannie and Freddie's system, which gets ran through no matter what eventually. But a good mortgage broker will do it beforehand, because when you're putting in offers or you're giving out that pre-approval, at that point in time, you're good to go. I don't want to wait till we get the contracts, submit the loan to the bank, and then they run it through the system and say, we got an error. Now I got to call you guys back, and you're going to say, well, why we had an error at this point, right? When we could have figured that out. And again, the simple answer is, you might say, well, why doesn't everyone just do that then? It's more work.
Yeah.
It's just more work.
It's basically right. It's more work, but what it ends up doing is it ends up costing all the agents all of their time, right? If they're showing houses to somebody who can't afford one. And then at the end of the day, when we submit offers, it also, when we're working with a good lender like you, obviously, we are confident that buyer is vetted properly and that offer is going to close. And there are other lenders who are lazy, like you said, who don't vet them properly, don't put them through those processes, and they have a lot more deals that fall through. And so when you're putting offers in, as a listing agent, you're looking at those and you're like, wow, this lender's good. We like that because it's a pre-qual from him. Ooh, this lender has an issue with deals falling apart and stuff.
Yeah.
So,
Yeah.
like, that's huge.
And from on my behalf, I don't want that reputation, right? Because
Yeah.
eventually you do more deals, name gets out there. I won't want that for me because I work very hard. So for me, I try to take the extra step and do that. No, it doesn't need to be run on every file. If you got a DTI that's 20%, I mean, you don't need to run it. If the credit's 780, 800. But on deals, I mean, Heather and I talk about this. I always make sure because I understand not only for myself, but I know you guys. I don't want you guys going out there running around on a pre-approval that's really like kind of shaky. I want to give you
And
my
you're-
pre-approval and to be
You're
really, really
saving
good.
face for everybody, really.
Yeah.
You as the lender, the realtor, having to look bad by submitting an offer and then being like, oh, never mind, they can't really afford the house. And also the buyers, you're saving them disappointment. If they're looking at $400,000 houses and they find out they can only afford $350,000, well, now they're going to be really deflated because they just wasted all this time thinking they could afford $400,000. Right?
Yeah. So that's yeah.
Yeah, you're one of the biggest pieces in the puzzle, especially in the beginning. And we're obviously working with buyers. We're talking about here on that side. Like, if you are a good lender, where you have a relationship with an agent, that agent trusts you, that the buyers that you're sending them on those pre-quals are buyers that they should invest their time with and take her out looking and shopping for homes.
Yeah.
And we're trusting and relying that you're going to close that, and that's why it's so important to work with good lenders.
Yeah, I do feel it's really important. Sometimes it gets overlooked from some agents, and how you brought that up, that sometimes they think just a mortgage broker is a mortgage broker. I don't think that at all. But I'm glad you guys do, but there's some that don't.
Yes.
And then you say, oh, we're just going to push it through. It's just a loan. It's going to get approved. No, there's a lot, and especially now, the market is really different, as you all know. It's changing a lot. Guidelines are changing constantly with banks. If you're not up to date, it's not the same. You can't just push through or just throw stuff on the wall hoping it just sticks. I don't like to do it. I don't like to stress either. Knowing we're going to go in there and we can control this stuff, that's what I want to do. That's good. Is make sure what we can control is going to be nice and good and clean and not have any stress during the process, and then just communicate with each other. That's what I think is the best. With that being said, so after that goes to the underwriting, okay, then appraisals ordered right away. Appraisals with our appraisal companies are pretty quick. It gets ordered right away, probably within 24 hours of them e-signing, because they have to e-sign first. And then we order the appraisal, and that's being done as we're underwriting the file. So I don't stall the loan. We still got to underwrite as the appraisal is going, so we can clear some stuff off. Because as you guys know, borrowers, some are fast and some take their sweet time, and they don't get us the documents. And you guys are calling and say, "What's taking so long?" And that's where I communicate with my realtors.
Yeah.
I say, "Listen, I need your help. John is just not answering my emails. He's not answering my texts. I need these bank statements. I need this stuff. Can you maybe chime in and help?" This is where you guys want the communication with a mortgage broker and a realtor, and not some other person that you just don't know who's on the deal, right? And then as that's going on, title's coming in, we're clearing the conditions, and once that's all cleared off, then basically that's how you get your clear to close. Okay, CD gets sent out. Once they consent to the CD, you just have to wait 3 full days and you can schedule a closing. Okay, the banks that we use, their turn times are really quick, the top like 5 banks, and that's how we're able to do some. I mean, honestly, I would say right now, 'cause I'm really particular about this, I try to do like 30 days. Okay, some things, just aren't out of our control, title's not in, we have issues, but that's basically should be your process. Okay, co-ops are a little different. Don't put co-ops in this because we have the co-op board. I don't know if you guys.
1099s.
Yeah, you know what? I'm if it's self-employed, I'm okay.
Okay.
Yeah, I still will put them in here. I mean, W-2s are your easiest, but no, self-employed I'm fine with. Especially now with the banks that we use. No, I would say still 30, 45. Just co-ops take a little longer because of the co-op board, right? And we can go.
Pretty good.
Yeah.
I mean, that's what I've been. I mean, if it goes past 45, I'll tell you this. Even if you guys are okay with say 60, just say I'm not happy with 45. I'm going to my process and saying why we have 45.
Right.
Yeah.
If it's something we couldn't control, all right, I'm not.
Yeah.
I can't get upset about that. But if it's something that maybe we just weren't on top of, and we were like, oh, we forgot to text the borrower or call the borrower, email,
Right.
then I'm getting upset, because me and my processor, we have certain, guidelines between ourselves and dates that we want to hit. Things that can affect the mortgage. So these are things that pretty much are kind of out of our control, right? Appraisal. Right now, appraisals are pretty tough, I feel like. I mean, you guys tell me, I think they are from when I talk to other agents, right?
Thankfully, I have not had any issues.
Okay, you've been very lucky because right now everything's going over, and these appraisals sometimes are coming in short.
Yeah.
And
so maybe you could actually answer a question just because we're just getting started. So to a new agent, if they don't understand that if a house is listed for $500,000 and their person, because it's a crazy market, it's a bidding war, there's other offers, they want to offer $540,000.
Mm-hmm.
What is that house, and why is it important for an agent to understand where the appraisal needs to come in?
Yeah. So if it's listed at say 500 and ends up being the accepted offer at 540, now when we go do the appraisal, if that comes back, the appraisal, that home is valued lower than 540, okay, the options you have, the first thing is the seller has to come up with the difference, okay? Because the buyer will have to come up with the difference. And the reason for this is the bank will only lend off the appraised value, okay? So if it came in at 520, the bank is only going to lend off 520. That other 20K has got to be made up from the buyer. Now, the agent can go back and you can counter and try to meet in the middle or come down or whatever it is. I mean, if there's no appraisal waiver, they waive their appraisal, then you can back out too, but just know that they have to come up with the difference.
Right.
And that could be a big thing for people. And that's where you have to communicate with the realtor. And the realtor needs to communicate with the mortgage broker. And if that's an issue, right, and you guys know, and this is where the realtors need to communicate with us, if you guys feel, hey, listen, I ran comps, this is so far over what it's worth, we know we're going to have an issue, right? Tell me, because now being a broker, I have the relationships to send it to certain banks that I know it's going to fall in the hands of an appraiser that I know that is going to be very strong on appraisals, and I can communicate with. It's call them up and say, listen, we got this property, appraisal is going to be probably really tough on this one. I really need you to send out a good guy, or really do your research on this. I need to come in strong.
Yeah.
That's important. Okay?
Yeah,
Huge.
you can save your buyer $25,000, $20,000,
a lot.
even $10,000.
Yeah, you can save them a ton. And if it comes in at asking or at the purchase, then you don't even have to worry about this. And this I feel like is happening a lot. Again, you've been very lucky, but I know I don't know how it is here, up in Westchester, everything is going crazy over, and some of the buyers expect and they know that this is going to happen, and that's good. And and that's another thing too. When I pre-approve someone, you want to see if they have the extra cash. That's where we got to communicate. Heather might say, hey, listen, got an issue, and I might say, let me take a look at their assets. You know what, Heather, they do have an extra 30K just in case. If they want to use it, if they have it, right? And then we can kind of go from there. But this is where vetting your prospects, and this is where it comes in handy. And I always feel that my clients, in the mortgage, they're your clients too, right? So I want to help you understand your client, right, on the mortgage side. I want to kind of fill you in on that.
And a lot of times too, it's not to say that people don't want to disclose their financial to their realtor, but they don't want to go around telling everybody. So if we're able to talk behind the scenes and he can just give us the facts. We're not looking into their finances. We just want to understand their ability to purchase. Right?
Yeah, you guys aren't going to ask what's their salary, but I'm going to listen. Their salary is good. The assets, they have it. All right, there's cushion there. That's all we need to know. So you guys can feel better when you guys are going about your day and kind of knowing, all right, borrower A, we know we got some assets if something happens with appraisal. Now another big thing too is we don't require munis or C of Os. Okay, so none of the banks require that. So I know you with construction and everything. So what that means is if there's open permits, there's no C of Os on the home, or there's issues with the munis that come back on the title, we don't care. The banks we use do not look at it. They don't care about it, nothing. And that is really important when you have no C of O, or maybe an issue with a deck, or an issue with the home. We don't care. Now again, the attorneys might, but as the bank, we can close without it. We could put it in escrow, we could figure stuff out, but we have options. Okay?
So when you're running title, there's two sides to title, right? There's the normal side of the title, which is any liens, judgments, things like that. They're making sure that the property is clear, right, clear title. And the other side is the municipal reports, which are common to have issues sometimes because if somebody didn't take a permit for a deck or they didn't close out a pool or whatever, if
Finish
your
their basement.
lender is required,
Yep.
will not close without clean municipals, that can be it has happened many
Or it
times.
can hold up the
It
closing
can
for
hold up the
weeks.
closing, and now you're
Weeks.
you're trying to hold money in escrow, or you're doing all these things, which you could do anyway, obviously, if there's an open thing, but if your bank can close, that's a big thing,
Yeah.
it's very helpful.
And you guys might say, well, what is an extra 2 weeks, right? What is an extra 3 weeks, right? Maybe they don't care. Well, here's why it's important. Their rate could expire, right? Their documents could start expiring, and then we have to resubmit new documents. What if they went on a vacation and that particular borrower's job, they don't get paid when they're on vacation? Now the bank, now I got to submit a pay stub that they didn't get paid for 2 weeks. The bank's going to start asking like, they don't like that. So now, when deals sit too long, I always say time kills deals. When you get it clear to close, you want to close that. And that's why this is important, because some people might think, all right, we'll wait 2-3 weeks. The buyer's okay with it, the seller's okay with it. But just because they're okay with it, the documents can kill us.
Okay.
The rate can kill us. What if the rate expires and they have extension fees? And that adds up
Which
to...
can be a lot.
Yeah, I mean, right now, you know, the market is crazy. So extension fees could cost $1,500, $2,000. The buyer's gonna be pissed. Who's paying for it? Yeah, the buyer's got it. They don't want to pay it. Now they're pissed. They want to back out. You know, and documents can start to be expire. You know, if you got to submit updated bank statements, what if they did large deposits? We need to explain now.
Yeah.
What if they deposited cash? You know, and they thought, hey, we got the clear. We thought we were done. And they started doing, like, I've seen crazy stuff. So, and again, this just goes back to why that's important, but also why not only the mortgage broker, but why we're doing this. So you guys know these things. So not only me, but you guys can tell them too. And we can kind of tag team them. Because, you know, sometimes I say stuff to them, it's in one out the other.
Yeah.
And when a second person says it, then they're like, yeah, you're right. You know, they just need a little reassurance.
Two eyes are always better
Yeah,
than one.
so, and that's why I like to tell realtors I work with this, because it's very important in my opinion. It's very important.
Yes.
You know, maybe 9 out of 10 it's not, but that one deal it is,
Yeah.
and that you're gonna that's your cash, that's your commission check.
Yeah.
All right, so I kind of went over this a little bit, but I mean, right now I just feel, and I used to be at a bank. Being a broker is by far the best way to go. And the reason for that is big banks, you know, you're just going to have access to one program, one set of guidelines, one set of interest rates, no flexibility. And that's really tough right now the way the market is. And even if the market was good, it's still, you know, you don't want that for your client. You want to give them as many options as you can. Also, a lot of the big banks like the Chases, the Wells, all those, the Rockets, and we can even use those banks. I don't like to use because their inside structure of how they process loans is a nightmare. They take longer.
No 30 days.
No, I'm not. No, like I can use Rocket, and you know I used them when we first signed on with them, and I just don't like their processing. It's a nightmare. Everything is like automated. I need to talk to people. I need to do this. I can't talk to someone that I gotta get transferred in Ohio. I just
Going
can't.
back to what we were talking about before, that's your reputation. When we see listing on the listing side, Rocket, we blacklisted Rocket a long time ago.
Good, I'm glad you did.
So we're trusting you. You don't want to use Rocket because you realize it's making your reputation.
It did. It hurt me on a deal,
Yeah.
and that realtor, honestly, on that deal, I don't think I ever spoke to again.
Yeah.
And it wasn't, you know, it wasn't anything that I did. It's just,
Yeah.
it was just part of the process. But again, they don't know how it works sometimes on our end, and that's why we're trying to educate you. Also, those banks, they charge hidden fees. They always charge points. Okay, always charge points. And points isn't a bad thing. But what I find out when I talk to the clients is they just don't know about them. Okay, because sometimes buying down your rate, and that's what it is, buying down your rate. We'll go into that. It's not a bad thing, but when you're being charged something that just the borrower's not aware of, that's where I don't think they do right by. And they're known for that. They give these great, nice rates, but then it's going to cost $8,000 to get it. So I just can't assume that from a borrower. It's not my money to spend. It's a topic you need to discuss with them. But they're known for that. So the borrower just gets, oh, but their rate's so good.
Yeah.
But okay, what cost is it? Right? And that's where You guys gotta say, listen, talk to my guy. He'll do a breakdown. He'll create a loan estimate for you. You'll see their loan estimate and compare. And again, just being a broker, it's just kind of just different. We have the flexibility. I can control more of the deal being a broker. We have in-house processing. We have in-house underwriting with all the banks that we use. We have departments on our in-house company and the banks we use. It just expedites the process. So the broker side, I mean, I just kind of explained it, but again, I don't want you guys getting used to seeing this, but I mean, this is what we could do if, you know, things come in, we can close in 10 days. Again, I don't want you sending a DM like, listen, I remember you showed that 10 days, I want that. But this is what happens, when communication is great, when title comes in.
Facebook tomorrow.
I know, listen, I post this, so I post it, and then I get all the people like, oh, I didn't get my 10 days. I'm like, oh, why did I post it? But this just goes to show when communication is involved, title comes in, the borrower listens to you, you know, sends you back documents that you're requesting in 24, 48 hours, this can happen. It could. I mean, like I said, I would say I probably get in the 20s right now of this. But again, I don't want to promise that on every deal because every person's different. But I just want to show you this is what could happen, right? If communication is good and things are coming back quick. And then we get same day approvals. So if you guys submit a loan in the morning, we register it. I can call you back later on and say, listen, I got a commitment letter for you ready. You know, like how we just literally got to put it in. That's how quick some of the banks are. Okay, and that's that commitment letter that I was telling you about. When it's just the conditions from the borrower, appraisal needs to be done still, but at least we know where we're at and we got an approval that we can at least kind of show the attorneys and everyone. All right, and then kind of went over this too, pre-approval. Pre-approval, honestly, it gets underlooked, but it's the most important part of the process. It's so important. Everyone thinks that pre-approval is just some little step in the process. It's not a big deal. I think it's the most important thing as a mortgage broker. And I know realtors, some probably even still don't think so, but I think it's so important. And I'd rather take an extra day or two making sure it's done right than giving a pre-approval out.
On a pre-approval, I have a question for you that comes up a lot of times with buyers. And buyers are sometimes paranoid. Some of them are paranoid about their credit hit, right?
Oh, yeah.
They don't want to get a pre-approval. You're gonna run my credit.
Right.
Soft hit, hard hit, blah blah blah.
All right, so I get asked that all the time. I mean, I got asked it probably yesterday, and the day before, and the day before, and the day before. Honestly, when I explain it, okay, they understand it. So what I would suggest doing is try just telling them, and this is just telling them how the process and the truth is they have to run their credit eventually.
Yeah.
Okay? They have to. It's just part of the mortgage process. Now, if a mortgage person runs their credit, they're not going to ding their credit. The credit bureaus know that a mortgage company is running their credit and they're going for a mortgage. They're not going to hurt them. Okay? What you don't want them to do is go to 4 other mortgage brokers, okay, and have them run their credit, or go for a credit card, or go try to get a car in that period of time. That can hurt. Okay? So once you kind of tell them that, they're a little more open to it. And again, what I tell them too is, because they'll say, okay, I get it, but I don't have debt. You know, I know my debt. I'll just tell you it. You know, I know my score. I got Credit Karma Experian. And they kind of rebuttal that, right? Even after I tell them, that's fine. Credit Karma Experian is completely inaccurate. I don't care what it is. It's never close. And honestly, a 710 to a 690 doesn't seem like a big difference. It's a huge difference. So I need to know exact, okay? Because then if I don't do that, now what do I do? You guys are waiting for a pre-approval. So now I'm on the phone with them, or I get off the phone. They don't want me to run the credit. I mean, you guys need a pre-approval. The decision is, do I do it and just listen to what they said, or don't do it, right?
Let's also bring up the topic of the pre-approval being the most important thing for the buyer in their sake, because do you want to feel comfortable in what you can afford? Like, as a buyer, do you know what you can afford if you don't have a pre-qual and you don't, like when you pre-qualify somebody, you're giving them an amount. So you're going to be able to, at that point, say, okay, here's what your approximate payment's going to be. Now we know as agents where they are, where they feel comfortable, right? We can look at the taxes, And we can start putting these things together to put them in a position to look at houses that are within their budget,
Right.
not outside their budget. And
Yeah, and that's what I was going to say. Not only that, because then that's what I was going to about to say. They'll say, here's my credit score, here's my debt. Can you do it off this? It's not accurate, okay? And to your point is, I want to run it because I want to see what's the real truth, okay? Whether it's good or bad, right? And then give you an accurate pre-approval, because then they'll say, well, I make $100,000. What do you think that can get me? I don't know. I got to see your debt. Well, I got one car. Do you know how many times people told me they have no debt and I pull their credit and I'm like, you have a card and you have that other, Macy's card. Oh yeah, I forgot about that. Mm-hmm. Is that a big deal? Yeah, it's a big deal. Like, I need to know these things. And I know it sounds crazy, but I can tell you some crazy stories. So to me, I don't want to put my name on something that I'm not doing it the right way. So I tell them exactly what you said. This is only going to help you. Mm-hmm. This is going to tell you exactly what you can get a pre-approved for. So when you're going out there, you're not wasting your time. And what if there's issues on there? What if there's a bankruptcy they didn't tell me about? Mm-hmm. Right?
Yeah,
what if there's
yeah.
collections? Right? What if their score is just not high enough to get a conventional loan, but I had information and time at that point to work on it to get them it in the future, rather than pulling their credit in 2 months when they found the home.
Mm-hmm.
Yeah.
Now it's too late. I can't help you. We don't have enough time to work on your credit.
Yep.
And that's where I don't just write pre-approvals, to be honest.
Mm-hmm.
Another mortgage broker might say, you know what? All right, I just want to get the realtor the pre-approval and make the borrower and the realtor happy, right? Because if Heather gets it, like, oh, that was great, ALLIE got the pre-approval, borrower got it, but that's not a good pre-approval right there.
Yeah.
Toilet paper.
Right. The borrower's going to be, oh, thank you. Now the borrower might be mad at me and say, you know what? I don't want to work with this guy. He's asking for this. He's not doing it. And he might go to another mortgage broker. He might. Go to him.
Yeah.
And maybe it does check out, but I don't want my name on that. I need to do it accurately. And honestly, most of the 9 out of 10 times, they do come back. They do come back because the other guy's hopefully going to say the same thing.
Yeah.
And if not, this is where you want to know your mortgage broker. She might be like, Heather might be like, ALLIE, they didn't use you because they didn't want to pull their credit, so they went to some other guy, John. He gave me the pre-approval, but Heather might be like, I don't know, John. I don't know if I should. I really wanted to use you because I know your style. So that's really important. Okay, but that's when I communicate with. I always communicate with you and say, listen, here's where we're at. They're giving me a tough time or not, and I try to ask you guys if you guys can kind of back me up and explain to them too why it's important.
Yeah.
If they're really like giving us pushback.
I've been working with a family in the past, right? And they had a pre-approval from different lender, and I was like, I saw the interest rates going up, and I'm like, you know what? Just talk to ALLIE. I think he might be able to do better. Do good by you. Just talk to him, have him vet you. He'll give you a good pre-approval. It'll be strong. It'll make your offer better. And he come back to me and he was like, I can't give him a pre-approval right now for a conventional loan. But then I knew, okay, well, I've been wasting my time.
And we ran it in DU. Didn't we run that one in DU? Because I feel like we ran a few in desktop underwriter in AUS.
Yeah.
And because I'll do that. I've done that for Heather, where it's on the cusp. We'll say, you know what, Heather, I'll just run it. Give me like an hour or whatever, and I'll just run it through and see. And if it comes back an approval, then okay, cool. If not, then at least you know.
Yeah.
That's really important when you're on those deals on the cusp, because you gotta remember, it's not just my name too. You guys don't want to put offers in either, right? From the buyer side, and it doesn't work, right? Then they see your name, and it's like
your name, it's your reputation, and your time.
Right. So they don't want to see Heather's name. Oh, this client didn't work out. This client just worked. And then you gotta remember, it's my name, right? And then it's also Heather's. It's you guys' name. It's reputation. And honestly, in this business, I realized how I grew mine was reputation and tons of reviews, great reviews. That's how it comes from referrals. But and just doing right by them. Honestly, sometimes if it's a crazy borrower and they don't want to cooperate, sometimes it's not worth taking them on, in my opinion.
Definitely not.
Okay? As much as you want every client, I wanted that. Trust me, I did. I never want. Sometimes it's not worth it if it's going to hurt you and hurt your business because of one client. That's just my opinion on that.
Yep.
Agreed.
What's the lowest score that you've approved somebody for?
We'll get into the
we're going to go into that.
All right.
Okay, so I'll go briefly on this because it's more of when the clients ask. But listen, if you guys wanted me to go in detail, I can go in after closing costs.
Done on that.
Yeah, closing costs. Everyone wants to know closing costs. The main things that make up closing costs is you have an underwriting fee from the bank. Okay, that's standard. Typically, it's about $800 to $1,200. All the banks are pretty much the same. All right, then you have an appraisal cost, which that's the only cost that the buyers pay up front. Okay, put it on a credit card. About $500-600. Then you got credit report, which is, maybe like $40, very minimal. And then the big things that make it up is you got the title, you got the mortgage tax, you got the property tax escrow, and homeowners insurance escrow. Those are the 4 really big things that make up closing costs. Okay, so mortgage tax, you got, well, I'll use New York State. New York State, you got New York State mortgage tax that the buyer has to pay. And then you have the transfer tax that the seller pays. Okay, and then you have title charges, right, from the title company. And then you have the property taxes that they need to escrow. Okay, some of them escrow a different amount of months. Okay, and then you have homeowner insurance. Homeowner insurance they have to pay for the first year up front. So typically that could be $1,500. Property tax, if you have a home that's $1,000 a month, if they have to escrow 6 months, that's $6,000 right there, right? You got your $1,500 of homeowners. Mm-hmm. Mortgage tax is depending on the purchase price of the home. It's a straight percentage of New York State and the areas and the counties that it's in. Typically, if you find the home that's $500,000, it might be about $4,000 around here, probably of mortgage tax, maybe 3 to 5. I would say 3 to 5,000 in range because it goes by percentage. And then title is whatever the title company charges, and that is typically ordered from the attorney. Okay, so that's your bulk of it. Mm-hmm. Now again, the only thing that would be added on my end that I can control would be if I was going to charge them any points for their rate. Other than that, as a broker, they don't pay me. We get paid directly from the lender. Okay, so it's all solely kind of numbers that are right black and white. Whether they go to another place, it's kind of be the same thing, right? Unless a mortgage broker is charging 1 point versus this, then this could be different. But all the stuff is pretty much the same. Yeah. A rule of thumb, if you guys want, if they're asking you, always have them talk to me. But if you want to be kind of on the safe side, you can always say 4 to 5% of the purchase price. 5% is being very, very conservative, but in my opinion. But you always want to be conservative, and a lot of it depends on the property tax. If you have a high property tax, that's going to make your closing costs a lot higher. If you have a $25,000 property tax versus an 8, it's going to be a big difference. Big difference. True. But that's going to be the bulk of it.
That was my question. You actually answered it because a lot of buyers are asked, well, approximately what is it going to be? So I was going to ask you what percentage.
And up here, I believe, you guys might know actually, up here, I think they make you guys escrow like 10, 11, 12 months.
Sometimes up to a year, yeah.
Right?
Sometimes.
Okay, so in Westchester, they don't do that. But I know up here, because I do business up here, I'm just trying to think, they do make you do that, right? So, all right, that's important, because now if you have property taxes, even if they're $10,000, right? That's $10,000 right off the bat. Boom, $10K, you're at closing cost. And you got underwriting fee you got to add in. And you got the homeowners, and you got the mortgage tax, and you got the title. You see how easy this can get to 20, 21, 22, right? And then God forbid we're in the process, and then those munis or something comes up. Now you add extension fees, right? The appraisal comes in lower. Now you got to come out of pocket $10K. Before you know, you could be looking at 30, 31, 32, 33,000. See how that can add up really quick? So when I look at this, I try to prepare for all this stuff. That's just because been in every situation, I've seen it. I try to foresee things, and on top of that, I just love what I do. So I want to make sure everything checks off, make sure we're good. But that is what makes up closing costs. And like I said, your clients are going to ask you a lot. Best thing to do is give them that number of the range as an estimate if they haven't talked to a mortgage broker. But then the mortgage broker can dive into it more, because I don't want you guys diving into it. All right, accept over, we can skip that. USDA, we can skip that. We can go VA. You guys do a lot of VA?
Occasionally.
Okay.
We're close to West Point, so sometimes we'll get people that are working there.
So VA, you can do 100% financing. Okay, they don't have to put anything down. I'm sure VAs are tough right now. Okay, because of that, they're not putting anything down, and probably the sellers don't want that. But honestly, a VA is a great loan, especially since they're veterans. Honestly, if I was a listing agent, I would try to give them a little bit of consideration because they served and stuff for us. But some of them just don't like it because they just don't have a lot of skin in the game as a down payment. But honestly, it's not that big of a loan, even if they don't. If the mortgage broker is qualifying them and it's going to be approved, at the end of the day, in my opinion, the seller's still getting the same money.
Yeah.
Okay. VA's appraisals are a little different though. Okay. You have to go through the VA appraisal portals. That's the only thing that I don't have control over. So yeah, I mean, I can see that part of it. Sometimes you have to do water tests and things like that with VA because they're a little more strict. So I can see that part. But other than that,
before we go into the programs, let's just make mention quick of the strength of offer is what we're talking about here,
Yeah.
right? If all loans were created equal and all buyers were created equal, well, we probably wouldn't have jobs. First off, but then there would be no vetting buyer, strength of offer, and anything like that, right? So what we're talking about here when we get into these programs is what's involved in them qualifying for the program. That is going to reflect the strength of the offer that they make, right? So if they don't have any skin in the game, like ALLIE said, that's going to be a weaker offer, right? Because they don't have any money in the deal here. And so if something does occur, like the appraisal comes in low, who's going to cover that? Do they have money to cover that, or are they just doing it 100% financing? So we're going to talk about all these programs, and we're going to look at them and kind of get a grasp on which ones are stronger programs and how they affect the strength of offer. So,
yeah. And that's too where we'll go in, but maybe you can just be creative and tell the listing agent they have the funds, right? And maybe show proof of funds, but they're just taking advantage of the VA, right? Because VA rates are lower.
Yeah.
All right. But basically, I don't want to go too crazy into the programs. I want you to know what programs are available and kind of the basics of them.
Now, is it true with VA too that because this is what I suggested a few times to some VA buyers, they were like, well, I don't have to put any money down. And I'm like, yeah, but you have to understand, by putting some money down, you're solidifying in the seller's mind that you're willing to show, right, that you're serious. So maybe we put some money down, it gets held in escrow, and then they put it towards their closing costs at
You
the
can
end,
do that.
right?
Yeah.
So then at least, okay, there's some money on the line here that they could potentially lose, but they're going to put it and use it towards their closing costs, because they're always going to have closing costs no matter what.
Exactly. No, you can absolutely do that. Some are doing that. Some are even, what they're even doing is they'll say we're going to go in putting down 15%, 20%, and then once we know we're approved and kind of get deep in the process, they'll just say, hey, can I change it? Just instead of putting 20% down, just put 10. At that point, if you're really good and the loan's kind of at that point where it's not going to affect anything, for me, it's a click of a button, right? So
Makes no
and it's
difference.
like they got the deal and then they didn't have to put the 20% down. They could put the 10. So a lot are doing that too. A lot of my coworkers are doing that with them being savvy. That's just because you're showing 20% down.
Sure.
But maybe they just said, you know what, we decided we want to do some work to the home, or we got some expenses coming up and we just want that extra percent in our bank account, and we qualify for the loan, so it doesn't matter. Has no effect on the seller side, and they won't even really know at that point.
Yeah, later on they're
not gonna know.
They don't
Yeah.
check up.
They're capable.
Yeah.
That's what
As
you're
long as the
qualified
loan's
for.
gonna get approved for it and closed, at the end of the day, no one really, I don't say cares,
Yeah.
but they just want to make sure it closes,
Yeah,
Yeah.
exactly.
right?
On the VA, before you go right to the next slide, the other thing is obviously people do like to support veterans.
Yeah.
Which are, they fought for our freedoms and stuff. So they're not necessarily bad loans just because there's the 100% financing. They a lot of times do have money.
Yeah.
It's just that's what they're capable
Yeah.
of financing. So, and the one last thing to make that is important on a realtor side is there is an inspection done on a VA loan.
Yeah, yes, there is a termite
So
inspection too and stuff.
Is the VA inspection similar to the FHA one, which we'll get into?
Yeah, VA you can kind of compare it to the FHA side. Okay, even with like how we pre-approve them and stuff, ratio wise, guideline wise, it's definitely more closer to FHA. So when you guys are looking at it, if there's no railings, chip paint, lead paint, all that stuff, yes, you're gonna have to fix that. Okay, but also know too, plus it's the VA and you could do 100% financing, they could put down money still. If they want to put down, 10, 15, 20%, they could do that. They just have the option to do 100%. Okay, so keep that in mind. And also VAs are only for single family or multifamily. It doesn't work for co-ops at all. In condos, it has to get approved. Okay? So we're going to go into the two basic ones that probably are the most popular and that you guys know is FHA. Okay? FHA and conventional. So FHA is someone that wants to put a very minimum down payment. It can go down as 3.5%, and someone that has low credit score. Okay? Typically, on the conventional, you can go down to 620 conventional, but I would say if I see someone that is 670, it's that's my lowest. I'll go conventional. So anything other than that, if it's lower than that, you're going straight FHA. So someone with a lower score than that, and we can go down to 500. Okay, they have to put a little more down, but we just know we can go down to 500 on FHA. And then going back to what Phil was saying, appraisals. Okay, when doing the appraisal, so it's more strict than a conventional. So you want to make sure that handrails are there. Roof is in good condition. There's no safety and health hazards. There's no holes in the wall. No wires hanging, things like that. Lead paint. Okay, because then what we have to do is we have to go back, fix those, and then send the appraiser back, and make sure everything's taken care of.
And the buyer gets charged.
And the buyer does get charged. I mean, typically, probably like $250 to send the appraiser back.
Wow.
Okay. Also, FHA can only be for primary residence. Can't do investment on FHA. Okay, so FHA will only be for a single family or multifamily home. Can't do it on a condo. Can't do it on a co-op. So as you can see, it's kind of similar to the VA. Okay. And the ratios are more flexible on an FHA. So what that means is they allow the borrower to have more debt, basically, or less income, however you want to look at it. I just look at it as more debt because usually that's the biggest thing. So it just allows them to have more debt than a conventional. Okay, and we'll go into after the next conventional why you might lean towards FHA or conventional. But FHA is not a bad program if the home's in good standards and it's going to meet the appraisals. It's fine if they want to put 3.5% down. It's just a great program for them for the first time home buyer. Interest rates are lower. They can go down to the lowest down payment that they could do, and if they have poor credit, they can still get a home, right?
Question: how long would they have to live in the property until they want to be like, I want to rent this out to a family member or whatever? Is there like a limited time?
Well, I don't want to say it on camera, but we could go with that off
record.
Yeah. Technically, they're going to want them to be there. I think when they sign at the closing, because you're going to sign like an affidavit at the closing that this is your primary residence.
Right.
I think they have to occupy within 60 days, and then I forget the term on how long they can go. I can't remember. I can tell you, but it might be. I feel like it might be like six months or a year. They have to live in it.
Okay.
And then if they wanted to, they could. But they're not gonna they're not gonna know that if in a year or 2 years they're gonna go, and maybe buy a new home and they could rent that out and stuff. But yeah, we can go into that too. And conventional. So conventional is someone that's going to have really strong credit score, right? Like I said, I personally don't like someone to go under 670. It's just hard to get approved, and honestly, when you fall under 700 on a conventional, you're getting crushed in interest rate. So typically, unless we have to to win the deal, that's where I kind of defer to FHA because you just get crushed. At conventional right now, they want 700 or above. Okay, but it could get approved for lower. Technically, like I said, it could go down to 620, but it will never approve the AUS system, which is running it through Fannie and Freddie. But conventional, you could do it on a primary. You could do it on a investment. Okay, primary is as low as 5% down, unless you're a first-time home buyer. You take a course and you meet the guideline and income restrictions of that property, then you could do 3%. But it's really tough because they make the guideline restrictions income so low that if you meet the guideline income restrictions, you probably can't qualify for the home. So it's like, this makes no sense. It makes no sense. It's like to buy a $600,000 home. Yeah, we could do it, but the income, you have to be under $70,000. Well, $70,000 can't buy a 500. So then it's just they do that probably on purpose, just to say we allow it, right? But they don't. This is where your clients might say, well, do I have to put 20% down to buy a home? They always think you got to put 20. What they're thinking is, if they put 20% down, they won't have PMI. That's what most of them think. You don't have to put 20% down to buy a home. I mean,
Can you explain PMI?
Yeah. So PMI is private mortgage insurance. Okay. On a conventional loan, anything less than 20% down, they're going to pay PMI. Now, with strong credit, PMI with the banks that we use are really strong with their PMI. Could only be $50 a month. Okay. So if someone says, I don't want PMI, I want to save up to 20%, I only have 10%. Well, if they talk to me, I might say, hey, well, why are you going to wait when interest rates might go up, keep renting, when your PMI might only be $60?
Yeah.
And most of the time they're like, oh, I thought it would be like 300, 400. No. So that's where you guys don't want them to, get discouraged and not look, have them call me.
So the reason why they want 20% down is because they want to make sure they have a cushion in their loan to value, right? The ratio, they want 80%. Now, what if the appraisal comes in higher? Does that affect whether or not they have to have the PMI?
So if the appraisal came in higher or lower?
So they had more equity in the property.
I mean, if it came in higher, it could help them in the sense of now they could use that equity, okay, in seller's concession. Now they can get closing costs rolled in.
It wouldn't waive the PMI?
No, it's not gonna. It's not gonna waive it.
Okay.
No, because it's still gonna go off of their down payment to the original purchase price.
Okay.
Yeah.
And then when do they have an opportunity to remove it?
So once it hits 20, it automatically gets removed. So say they put 10% down. Once every month, as they're putting in more principal, as they're paying it down, and they're gaining, 11% equity, 12%, 13%, as it's going. Let's say in 4 or 5 years, when it hits 20% equity, because now their principal balance has dropped, it washes away the PMI.
Based off of their original purchase price?
Yeah, because they're going to take the original purchase price of $600. Let's just say their loan was $500. In 5 years from now, that $500, let's just say it's $460. $460 into the original price of $600. If that's 20%, then that's where it stops.
Now, do other loans require PMI?
FHA requires PMI. Okay, FHA will always require PMI. Okay, no matter what you put down. Okay, if you put down less than 10%, it's on for the life of the loan. If you put down more than 10%, it's there for the first 11 years. Okay, so now what most people do with FHA when they hear that and they ask that is most of the time go FHA. Okay, and depending how the market is, you can refinance in a year or two, right? Once you gain more equity in the home, or maybe work on your credit score if that was the issue for that particular person. Maybe their credit was 640 and they have to go FHA. Let's get you up to 700 in a year and a half, or whatever, that's possible. Do a refinance, go conventional, get rid of that PMI. So these are things where if they're discouraged of, that's a good point, they're discouraged of FHA and they're like, I don't want to pay that PMI, okay? It's there for the life of the loan. Well, first of all, if you got to remember, most people aren't in the home for 30 years. So they're going to start doing the math. Well, $200 a month of PMI, 30 years, you're not even probably in the home for 30 years. You're calculating for stuff that's not even there. And also you can refinance. You're not going to be in this loan, right? You're probably going to refinance. Especially now, everyone that's getting these rates, okay, probably to refinance in a handful of years. Rates will come back down. I don't know when, but they'll come back down. So you got to tell them too, like, you can refinance. Like, don't worry about that. Let's get the home. And then for conventional, that's where you want to make sure that they qualify for co-ops, condos. That's you have to do conventional on the co-ops and condos. And then doing co-ops, if you want to get into that later, you got to make sure that when I pre-approve, my pre-approval make sure they get approved from my end, the bank's end. But then I got to make sure that they meet the guidelines of the co-op board. They have tighter DTI restrictions, debt to income ratio.
Yeah, we don't really deal too much with co-ops.
Yeah, I figured you guys don't. But just in case you ever come across it and you guys are confused, just text or call me, and I can go over with you. This is the big one. We have renovation loans. Okay, so there's two type of renovation loans. Let me see if the next slide. Okay, so the two type. This is an FHA 203K. Okay, this is probably the most popular one, and there also is another renovation loan that's called the home style. Basically, that's the conventional version. of the renovation loan. This is the FHA version, right? 203K. So if you hear an agent say 203K, that means that it's got to be a renovation loan, okay? And basically what it means is the bank will fund them for the work to be done on the home, okay? We got to get a licensed contractor, comes out, looks at the home, talks to the buyer, and sees what work they want to do. He gives me an itemized bid sheet, okay? We take whatever that amount is, we take the purchase price of the home, and we kind of add them together. It's that simple, and that's pretty much your purchase price. And that's where the down payment is coming from. So you have a home for 300K, you want to do 200K worth of work. That's pretty much to us, that's going to be like an all-in of 500K. And then if they want to put 20% down, let's just say, just doing easy, or 10%, that's going to be 50,000.
And
Right.
then the appraisal, right, has to be an as built, whatever.
Yes,
appraisal.
and then the appraisal, the appraiser will take that into consideration. They'll know it's a renovation loan. They'll look at the work done, and then they'll appraise it based off the completion of the work. Okay, but you need a licensed contractor for that. Okay, but those are great loans right now. I mean, I know you like, you know, you do a lot of that, but they're great loans. You know, in case someone can't find the home, and you've got homes up here that are just kind of beat up and just need a little uplift. You know, tell your borrower that they can get their dream home and
Or a lot of uplift if they have a vision.
yeah. I mean, listen, and they can do it how they like. This is another great way to, if your buyers are having a hard time finding something, just that's, you know, kind of move-in ready. This is a great option. Great option, and honestly, it's not. I mean, it's a little longer, but I just closed. Actually, I have two right now. I just got a clear to close on a FHA 203K in, which I didn't realize how quick it was. It was 39 days.
Wow.
And honestly, it felt like a long time because there's a lot of communication. You have the contractor, you have the renovation department. There's more people involved. And I just looked when we got the clear, and I was like, wow, that was quick. So the reason for that is we send it to a bank that specializes in renovation loans. They have their own renovation department that deals with everything. They deal with the contractor.
I was gonna
It's a
say.
little bit longer because they have to vet the contractor as well as the
Yeah, they got to get their
one,
insurance and everything. You know,
Yeah.
you got to make sure that they're licensed and get their insurance and all that stuff. But like for you guys don't need to worry about it. The bank, I don't even communicate with the contractor. Nothing. I just get the bid sheet, I upload it, I have the contact information, and the bank deals everything with the contractor. It's great.
The biggest problem that we probably face with these loans with clients is, like you said before, the vision. If they have the vision to walk through a house that's in need of a renovation, and they can, like vision it and picture it, then you've got a client that you can work with. Some it's just they're just difficult and they don't have vision, and that's going to be the problem.
Yeah, that's gonna be a tough sell. Like,
Yeah.
but if you are walking around houses with clients and they start saying, "Oh, maybe we could get rid of this wall and change the kitchen layout." Oh, okay, now you know this person is a visionary. So maybe like if they don't find any houses that they like, you say, "Hey, let's find something that's falling apart," and then you can redo it with everything that you do like.
And you got two great people that do this stuff. So you got him and you got her and the vision. So I would pick their brain. Definitely for sure. And also know that it's the same thing as what I mentioned before in the regular FHA. We can go down to 580 on that. So that's good too. You know, I mean, that's buy a home, renovate it, and have 580 credit, and only put down 3.5%. I mean, that is awesome for real. It is. It gives them a lot. It gives them a lot of options.
Yeah.
That way. Okay. So that's the traditional financing. Those are your basic programs that you're going to run into, especially the FHA conventional, FHA and conventional, and then the renovation that we just went over. What I want to go into that's really popular, and that I feel that if you guys don't know this, you should start considering it, because I bet you there's deals out there. I tell this to all agents, and after this, if you're really hungry, they start going through their database and they find deals. I promise you. It's just most people don't know about these programs. It's called non-QM programs, which stands for non-qualified mortgage. It's just another name for non-traditional financing. It's not going to be your conventional or FHA or renovation or VA. This is completely non-traditional, right? And what that means by that is it's going to be based off of certain guidelines and criteria that is just not done the normal way the loans do it. In return, they sometimes have to put more down as a down payment and higher interest rate in these programs. But it can definitely get you deals. And the biggest clients you want to kind of gear towards for these programs is self-employed people and investors. Okay? Those are the two most popular programs that I probably do a handful of these deals every month. Once I start telling agents this, they just start coming back. Or when I pre-approve someone, being a broker, again, you guys give me a client, they went to a normal traditional bank, no pre-approval. Now I might call you for Phil up, right, or Heather, and say, all right, listen, we can't go traditional. I got another program we can do non-traditional financing. I can still give you that pre-approval. It's a backup plan. And basically, what it is if we have a self-employed borrower, okay, if you don't know this, most self-employed owners of companies do not put on their tax returns and file what they usually really make, right? They put low tax returns so they can save money in tax, and that's okay. But to do that, it kills them when they go for a mortgage. They just can't qualify the traditional way, right? They made 50, but you know their sales and their revenue on their tax return showing 1.5 million, and they have a bajillion deductions. I can't do anything, right? You go to a Chase, you go to Wells, done. But here, what I would do is I just flip it towards non-traditional finance, and I tell them, hey, listen, we got a program. We can just use your bank statements, or we can do a profit and loss statement on your business from a licensed CPA. Get you home easy. And how that works is the bank statements, we take 12 or 24 months, and we just take their deposits, add them all up, take 50% of it, and that's their income. So if you got this person that's showing 50K, and I just had, that's why I use an example, they had about 100K of deposits every month, right? So their business was depositing 100K. So over the course of 12 months, that's 1.2 million, give or take, right? For him, I could use 50% of that, right? So I can use 600K for his income.
It's pretty good.
Yeah.
So that's the same as someone showing me a W-2 of 600K.
Yeah.
So this is what you refer to as a no doc loan.
Pretty much, yeah.
And how do the rates and stuff?
So right now the rates are good. Now this is really driven off of credit score. We can go low. It's crazy how low they will go, right? For credit. I mean, I think we could go down to like 580. Now again, your rate is gonna be banged up with that. Your sweet spot is 700 and above. Again, I don't want you to go out there thinking only 700. I'm just telling you that's where the rate's really, really nice. I just gave someone 700 above for this program, a 7.1. Now again,
And what are regular rates?
I would say in your head, some of you and even he said, "Oh, that's high." Regular rates right now are high fives, low sixes. Okay. This person to take a percentage, let's just use 1.5% over the normal rates is really good. You gotta remember, this person can't get a home.
Yeah.
And what I tell them is, once they tell me the rates are high, I always tell them this line, and they tell me, no, I'll take the rate. I say, listen, if you don't want that rate, that's fine. I say, when you file your taxes next year, show you made 200K. Just pay the taxes of 40,000, right? And then we'll go traditional. I'll get you that great rate. They're like, I'm not paying 40K in taxes. They're looking at me like I have 10 heads. So I'm like, so that 7.25 is pretty good now, right? They're like, yeah, that sounds better. Because then I'll go, because then listen, I tell them, you can refinance.
Yeah.
You're not stuck in this. It's just to get you the home. And then I tell them, it's an easy process. I say, I don't need your tax returns. I don't want your tax returns. I don't need anything. Just give me your bank statements, give me your driver's license, give me your appraisal form to order an appraisal, the contract, and that's it. That's it. That's all we ask for. And we have to get a CPA letter, but that's nothing. It's just saying his business is active. That's easy. And that's it. Now, if his bank statements say don't show deposits, it gets even better. We can do a profit and loss statement. Okay, this is like my get out of jail backup card. You do a profit and loss statement. Okay, I just need a licensed CPA to basically just write profit and loss on his business. Now again, I don't care what his tax return said. Okay, I'm not going to go into detail, but I just need an income of what the CPA said. If he needs 150K to qualify, just show me a profit and loss, and have a licensed CPA write it. That is all we need. And then I can use the 150K. I can use 100% of that. So that I probably do more of the profit and loss, just because some people just don't have the deposits in there. If they don't, I just do a lot of profit and loss. Okay. And it's the same thing, same rate. The only thing with the profit and loss is you got to put a minimum 15% down. And honestly, on these programs, 15 is not even a lot.
Yeah, and let's be realistic. This is, like you said, very, very good for self-employed business owners, stuff like that. At that point, like, you're dealing with the client who's typically making some money, but having a difficult time showing it. They should have down payment money. Hopefully they have decent credit, and they're really just struggling with, trying to keep Uncle Sam, their private business partner, out of their pocket, at which they're basically trying to reduce taxes. And so at that point, it's a fantastic loan and a perfect fit for that.
It's a great loan. And if they say, I don't want to put 15% down, so I had all these questions asked, and I know exactly how to answer them. If they don't want to put 15% down because they originally wanted to put 5, right? I'll tell them the same thing. Go to your tax return. Let's follow the guidelines and put that income that you need to qualify the traditional way, and then you can put down 5%. Again, he's gonna say, I don't want to put all that.
Yeah.
So what I say is, would you rather give the IRS, if you file the right way, 40K of taxes, or would you rather put down 15%, okay, and put 20, 30, 40 more K of cash assets you have into your home that you have equity?
Yeah.
Like that money you're putting in, I know you don't want to put 15% down, that wasn't the goal. You want to put 5, but at least that money's going towards the home.
Yeah.
If you do it when you file your taxes, it's going to the IRS.
Yep.
That's a good point.
Like, where would you rather put it?
Equity in your home.
I'd rather put it in my home because you know you're going to
Yeah.
get that back. That 40K you're going to pay in taxes, you might as well throw it light on fire.
Yep.
Really? Like, so like...
Because they're not putting it to any good use.
No. Yeah, so like when you explain it to them like that, and again, I don't expect them to know this. That's where, leave it up to me, but I'm explaining it to you guys in case you beat me to the punch and tell them this. We have these programs and they start asking you questions. Like
well, that's
that.
why it's good for us to know.
Yeah.
Because this process starts before Allie's even in the picture. You're prospecting. That's part of prospecting. Selling the prospect that you don't even have as a client yet. To show that you're a Rockstar agent and that you're competent and not a commodity, you understand all these loans. So you can help them get a home when other agents can't. That's the whole point of us having them here and us wanting to learn all these things so that you guys can go out when you're selling, when you're prospecting, feel confident, because sales stems from belief. So the more you understand in the mortgages and in the rest of the skills that in your craft, the more confident and belief you have, and then the more you're going to know, I am a Rockstar agent, and that person will be an idiot to not do business with me because I can serve them way better than every other agent that I know out there who is a commodity, right? Not that every agent's a commodity, but you want to be the elite. You want to be in the top tier, top 10%, 5%, 3%, right? That's what we strive for. So understanding all of this is psychologically, you probably don't realize how psychologically important it is in your ability to sell and your ability to go help somebody, because you're never even going to get them to ALLIE because the prospect you already lost because you didn't understand the mortgages and you didn't believe in yourself and you couldn't sell them on something that you didn't understand, let alone have the belief to believe that you're going to be the person that can really help them get the home that they deserve.
100%. So when you guys are out there talking to clients, I want you thinking we can always get a deal done. It might not be now, but I'm telling you, we have awesome programs. We can get it done. Okay? I have more programs I'm going to go into. I don't want you thinking that client can't get it. Even if they have poor credit, we can fix it. We have simulators we can run through stuff.
Yeah.
And listen, you might get someone that just can't right now and it's just going to be tough, but keep it in your pipeline because one day you will. Right? We all have different timelines of our buyers. All right, and another popular one is an investor one. Okay, so that was a self-employed one. Now this is an investor. So if someone is an investor where, let's say they have no job. They could be working, but let's say they don't. They are maybe retired, have a lot of cash, good credit. They can get, it's called a DSCR loan. Okay, only for investment properties, but all we look at is when they're putting in offers is we just got to make sure that the rent is more than the principal, interest, and tax and insurance. So basically the rent just has to be more than the all-in mortgage payment. If the rent is more, that's it. That's the deal. That's it. There's nothing else. There's bank statements. It's showing assets and contract.
Wow.
That's it. They don't have to work. Nothing. They And even better is we have two banks that they don't even have to have owned any properties.
Do you have to have leases in place to show?
You don't. No, they'll go a fair market.
Okay. And they'll use how much percent of fair market?
100%.
Okay.
Yeah, it's great. I do a ton of these now too. So they don't have to have a lease, okay? They don't have it rented. It could be vacant, and then the appraiser's going to go in and say, okay, this is a 2-unit home. Unit 1 is, let's just say 1,000. Unit 2 is 1,000. That's $2,000 of rent that we're going to get. Their mortgage payment is $1,700. Boom, we're good.
And with down payment and stuff.
Down payment for that depends on single family or multi. Single family, and this is another credit-driven thing. So the less the credit score is, the higher they have to put down. But it goes down to, on a single family, I believe 10%. Okay.
Good
and
credit
then
is 10%.
yeah, and a multifamily, I think 15.
Oh wow.
I'll check, but yeah, I think I just did a 15 for a multi.
Wow.
Okay, because typically single
And so
family
there's
investments.
there's no loan to value, nothing. It's just rent over. That's
That's it.
So there's
It's
more
no ratios. No ratios. I don't even put a job in. I don't even care about their employer. I leave it blank.
Yeah, what about
I know, it's just.
condition of property, stuff like that?
I mean, you want the property in decent condition. I mean, also these non-QMs, when they're doing their appraisal, it's like a conventional. Okay, these are considered. So if an attorney asked what type of loan, you don't tell them non-QM, non-traditional. They're like, what the hell? Some of them don't even know what it is. Just say conventional, because that's what it's listed as. It's listed as a conventional. There's no FHA mandatory clause. Appraisal's done just like a conventional. So these, how we write them, like how we put on our disclosures, we put conventional. That's how we put them. Okay, so that's how they're disclosed to Fannie and Freddie. Okay, that's another great one where you have someone that has money, good credit score. Again, they might not even have good credit score. I'm only saying good credit score because that gets them the best rates.
Mm-hmm.
Yeah. Rates on this, same thing. I just gave someone mid-7.
Okay.
I think high 7. Remember, these are investments.
Refinance it later.
Yep,
if you want
that's what he's going to do. And honestly, he could have qualified the normal traditional way, believe it or not. He just had a lot of businesses. He said, just because I don't want to give all my freaking returns and deal with my accountant, can we just do this? I don't care about the rate. I'm still making money on the property. I'll deal with it later. I said, okay.
Yeah.
And then, honestly, we're going to close it in 30 days. He just wanted the home, wanted to be done. He's a very busy guy. He didn't care. And honestly, the rate wasn't that big a difference because I priced it out both for him just to show him. And the rate would have been like 6.75 versus 7.5. He didn't care for it.
Yeah.
It's not a big loan. So for him, it was like $150 difference. Like, listen, I don't care. He's like Airbnb and stuff. He's going to do very well. But this is another thing, another good program when you see investors. And also,
Can you, on that note, you just mentioned Airbnb, short-term rentals. Do they include that as,
so here's the thing. For the rental, that's the hard part right now. Okay? Because I just had someone. They're going to look at it as a straight single family.
Okay.
Yeah, a single, like if it's a single family.
Sure.
They're going to look at it as just a single family rental. But the bank literally just came out last week because a lot of questions have been asked about this, especially me. I had a client that was Airbnb, and the single family wasn't going to come in the rent as strong as an Airbnb would.
Sure.
Right? So it could have, hurt the deal that way. And we got it to work, but they're now coming out with more of that. So I'll keep you updated. We just got a letter from them saying that they're going to start considering it, figuring it out.
That's
because
it's
that
lucrative now.
well, because you know what, a lot of people are doing it. That, and then obviously people using money with crypto. Those are the two things that the banks have to start considering now, because so many people are now asking that the banks are going to have to start considering what do we do with crypto money and what do we do with Airbnb when we're looking at these rentals, because people aren't just going to do a single family of 1,500. They're going to Airbnb it, which might get them 4K.
Yeah.
Right?
Yeah.
But another good thing too is, let's say the rent was under the mortgage payment. It's not a dead deal. It's just a rate. It's just a hit to the rate. That's another good thing. It doesn't even have to be it. Yeah. It's just their rate's going to go up.
Okay.
Maybe like, I don't know, I honestly never happened to me, so I don't even know off the top of my head, but maybe, let's say a point, I would say. Still can get it done. So there's really no dead deal in that. It just depends on the rate to them.
Yeah.
Also, this is an investment home, so now normal loans, you can't get gifts on investment properties. I don't know if anyone knew that, but you can't get it. We have banks that will allow gifts on this home. Also,
that's huge.
huge. One of my best friends, he didn't tell me that, and I'm like, dude, you can't it's an investment home. So we had to like flip it to a different bank because not every bank does that. An investment home is supposed to be for your own money. Banks don't want you borrowing money for an investment. It's so risky for them. So we have that where you can get 100% investment, 100% gift.
As we start to wrap this up, that's in closing here and stuff. I know we're getting.
Yeah, we're always the last
But
one.
I wanted to bring that up really quick because it is something that is important as agents to communicate with your buyers, especially because a lot of times you're talking with them when you're prospecting. Maybe they're not ready. They're in the 3-month window, and it's like that's the window right there when it comes to down payment money, right? We call it mattress money. You can't get approved for a loan if you can't show the history of where the money came from, right? So if you do have somebody that's gonna, where you're gonna be getting money somehow and whatever, if you get to them earlier, right, they can put the deposit. What is it? 2 months?
Yeah.
Yeah.
I think
2 months, and then now they don't have to show a record of where that money came from if it's in their bank account. It's already there. They're only showing 2 months back.
Yeah, it's seasoning. You want to
Seasoning
season
it.
the money. And listen, that's where I talked to him on the pre-approval. Tell him right off the bat. I asked him, you got cash, you deposit cash, I come up with the money. It's cash. All right, let's put that thing in right now.
Yeah.
Because then when you find the home, I'm not going to see that bank statement. The bank's not going to see it. It's all honestly, a lot of it is just communicating with each other and structuring it. That's like almost, more than half the battle, in my opinion, is how to structure deals. So that you can do 100% gift, okay? Because like I said, no bank will ever accept that. Also, the bank will also allow them to do an investment home with not ever owning a property. An investment home you're supposed to own, right? Because how can you get an investment? The bank wants to feel more secure. That bank will say, okay, you haven't owned a home, you live rent with your mom and dad still? Okay, we'll still give it to you. Listen, I have a kid like that now, that's why.
Yeah.
He's 23.
Smart kid.
He's 23.
Yeah.
He's like, I want to do the DSCR loan. Well, I got 3 banks that do it. One, you have to own a property. So I said, all right, we're not going to that bank.
Yeah.
And this bank, he's like, perfect. And he's getting a gift from his dad. So, like,
Wow.
you just like did the nose of everything you weren't supposed to, but this bank will allow all those. That's how rare. I mean, you're supposed to own a property. You're not supposed to get a gift. And this bank will say, you know what? We'll do it freaking whatever. And the rate's not bad. The rate was high 7.
Yeah, that isn't.
It really wasn't bad. Honestly, I think it should be higher, but whatever. I mean, come on. He's doing like he's doing everything you're not supposed to. And the last thing is, I know I sent it to you. I have signed up I have list reports, okay? And I pay for it on, any realtor's behalf that wants to use it. It's free for you guys. It's all good for listings. Creates marketing material for you, presentations, listing presentations. It does flyers, everything for you. It's free. I don't know if you guys.
What we should do a Zoom another time and just talk about that.
Listen, it's free. So if you guys sign up, cool. If not, no big deal. But why not, right? It just does stuff for you. It has a lot of cool things that you could do. I know some agents that I work with. They love it. It gives them like tip of the day, and it gives you like Instagram like stuff where you can post.
Yeah.
Where you want to do that too. Social media will go over another day because I think that's really popular. And then also, if you guys are doing open houses and you need me to create an open house flyer with like financing option on there, just let me know. I could do that for you. Put our names on it.
Cool.
And then another thing I'm doing too, when you guys do listings, do you guys have like signs and stuff? Do you guys leave at the house and everything?
Mhm.
Okay. What I'm doing, which is I just started because I know no mortgage broker doing it right now. Let me know what you guys think. Is I was gonna give you guys riders, put your names on it and stuff. I mean, I know it's probably on the sign. I don't know if it's a personalized sign you guys use or just your team. But if it's not, I could put your name on it, right? Put my company's name and the name, and then put a QR code. And the reason for the QR code is we have an app, a company app. They scan the QR code, they could fill out an application right there. And I get an alert, and I can do a pre-approval in 10 minutes.
Oh, wow.
You do those at the open house too, I'm assuming.
Yeah, you do a QR. I mean, everything's QR code. So if they're driving by, they just want to, maybe don't want to call you or something. They want to get pre-approved. I see it. They have to put in the address. So if I know the address, I know who the agent is, right? So I'm going to call you guys up, say, Heather, I got an application for someone. Maybe they have an agent, maybe they don't. If they don't, beautiful.
Yeah.
I just gave you guys a lead.
Yeah.
So I'm starting to do that because I haven't seen it, and like I said,
that's
if,
cool.
if you guys are interested in that,
Yeah.
I'll take care of the bill on that because we have to order them and stuff. And then if you guys would want to use them, and if your signs aren't
We
personally,
could even use your QR code in our advertising.
yeah, I mean it's
If you
it's
had-
I
you
get it
send
a
us
lot.
Your QR code, and then when we're doing our stuff, we could literally in our marketing and stuff put your QR code and say, hey, get pre-approved for this. Blah blah blah.
I get an alert right away on my
Yeah.
phone, and it tells you the property, and even tells you if if they know your name, they'll say referral source or how it was generated, and then I can contact you right away and say, listen, I got it, and they have to upload all the documents and stuff to it. And then also on top of that, you guys can download the app and then follow the all the work that's being completed on your client. So if I'm working on it and I do a pre-approval or something, you will get a note that ALLIE did a pre-approval.
Yeah.
Or if they upload a pay stub, you'll know they uploaded it. And if I didn't tell you in 3 days, because maybe I forgot,
Yeah.
like, ALLIE, I saw they uploaded the pay stub, but I haven't heard from you yet. And I go, I forgot. And also, cool thing is, if I'm busy, which I'm usually always pretty responsive, but if I'm out somewhere, you guys can also write your own pre-approval on there.
Oh yeah, I think you mentioned that.
Yeah,
before.
which is cool. A lot of people do it. I get an alert, so I see if someone uses it, but people do it. In case the bidding war, and you're like, all right, make it 650, 655, and sometimes 656, and sometimes agents like, I don't want to keep bothering you every 5 seconds. All right, so just do it yourself,
Yeah.
and I put a cap where they can't go over it.
Got it.
And that's just some cool features. But listen, that's it. I think we went over a lot, and there's honestly so much more to go over, too. We'll go over social media another day because I'm big on that. I know. I mean, that's how we met.
Yeah.
So it works.
Oh yeah.
That's how we
Oh
met.
yeah.
But no, listen, I know there was a lot. If you have questions, you guys could call or text me individually or group text, whatever you guys want. But I'm here to help, and I want to help educate you guys in the process as well. So you guys know how it is on my side. And honestly, at the end of the day, it just gets you more business. Your business grows,
Yeah.
my business grows. My business grows with leads. We can go back with you guys and get
Yeah.
leads. So we're a team.
Let's give you Allie, a
Yeah.
hand for that.
Thank you.
And we talked about it before in closing here. Your team, your toolbox, right, as an agent, is obviously lender is a huge tool in that box to build your business and to develop a good relationship and to obviously educate yourself, but then have that relationship. We work together, right, with everybody on our team here to be able to get deals done. Attorney, lender, right? Like there's multiple pieces of the puzzle that you want to have to be solid, because at the end of the day, you're not going to get to a closing table, build a solid reputation and a strong, thriving business if you got a bunch of weak tools in your box, right? So we try to make sure that we're working with high quality people and that we're building strength within our team. And we believe in ALLIE. That's why he is over here, talking with you guys. He's a solid person individually, as I have high respect for him and his integrity. And then he's also very competent. We talk about two things in sales. You want to build rapport, right? Know, like, and trust somebody. The guy's a good guy. He's got integrity. I like ALLIE. But if he's not competent, if he's an idiot, then I don't want to do business with him, right?
Yeah.
So you got to be competent and likable. So we like ALLIE, and he's competent.
I appreciate that. I tried it. Thank you. You made my weekend.